Ooh. Hey, Tommy.
What? I'm so confused.
Bro, just know I'm gonna present this startup, and you're gonna see if you're interested or not in investing. And this is
your
a startup.
or just a?
It's a startup,
Okay.
and yeah, I think it'd be cool. It'd be fun, and yeah. So
Fuck,
what's
dude.
new
All
with
right.
you?
Nothing.
Nothing at all.
I just saw you. I mean, like from like a few weeks ago.
You look good. Yeah, you look good.
You look great. I got my candle burning. You like that?
Yeah.
Plant?
Wait, where is it? Oh, I like the
Candles.
what do they call those? The little wall shelves?
Floating shelves.
Yeah.
What's new with you? You're drinking on this.
Yeah.
Sweet, dude.
Gotta get the blood flowing. Oh, what's new with me? I joined a running club. I can't talk about it though, because rule number one of run cult is not talk about run cult.
Really?
Yeah, but I just told you.
Fair enough, dude. Apparently, there's a club at University of Iowa, and
Yeah.
they're called like the Queso Club or something, and like they
Yeah.
have like these meetings where they find the best quesos like in the state, but like nobody knows about it. Nobody knows how to join it, but like very
It's like
few
a
people are in
secretive club.
it. Isn't that kind
Dude,
of tight?
Yeah, I think we should create some exclusive secretive club, in like some niche. Like it could be we could do that, but with hot dogs, and just go on a nationwide journey of finding the best hot dogs, and
I'm
then create
down.
like create like a membership fee, and it's like they got to pay us to join, but they don't know how to join. But then when they find us and they realize how exclusive it is, they're willing to pay so much.
You know what we should do? Yeah.
Yeah.
Same concept, but like just be the supreme of hot dogs. We come up with like one really
Ooh.
good hot dog, and we only drop it like one really good like meat like every like year. We just drop it
I think
randomly.
that's we make the packaging really crazy and like luxury based. So it would be the luxury brand, the premium luxury brand of hot dogs. And
Yeah, dude.
it's such an absurd thing that people can't help but getting curious about the idea. And then the Instagram page is like people eating this hot dog, this messy ass hot dog with like Louis Vuitton on, like all white. It was
Dude,
awesome.
Have you seen Nathan For You?
No, who's that?
Oh, dude, it's a great show. Same idea, where like he comes up with like these crazy, like marketing ploys essentially, and so like the very first episode, like it's comedic based, but like it's really funny, and like the first episode it kind of worked. It was like a frozen yogurt shop, and they were releasing like a new flavor.
Yeah.
And it was poop flavored. Like he worked with a chemical engineer, and like it legitimately like it's not like, oh, poop flavor. It's like it tastes like shit. And a bunch of people
that intrigued.
So many people came and tried it, and then he was interviewing them. He's like, "All right, yeah. So what do you think? They taste like shit."
No shit.
So
dude,
good.
Dude, if we could capitalize on that with the hot dog, where curiosity, like how could this one hot dog cost like $35?
Yeah.
Is it really that good? But like they're curious enough that they're willing to try it, or to just like be a part of the crowd. So, but yeah, Tommy, I appreciate you coming on the first episode of Should I Invest, where we look at startups and founders that are currently raising capital via Reg CF. Now, Tommy, do you know what Reg CF allows you to do?
No.
All right, so let me break it down for you. And this is what's so exciting. Reg CF allows the everyday person like you and me to invest in startups, where previously we would have to have a shit ton of money to be an accredited investor. Now we don't have to be an accredited investor to invest in startups. And wouldn't you like to say, yeah, I invested in the next Uber before it was Uber?
Yeah, sure. Who wouldn't?
I invested in it when it was like $6 million market cap before it became, I don't know, like $100 billion market cap company.
Yeah.
So this is what it allows you to do. Now, Tommy, how many games do you have on your phone?
Dude, I had a feeling, dude. I'm a sucker for those apps. Like I'm playing an app and I get that ad, and
yeah,
I'm such a sucker for it. I'm like, yeah, I want to do this. Like I literally just downloaded one for like zombies or something. It was just like some random one.
Dude, I get those on Instagram all the time.
Dude, like because like and you play them for like a second, and then I'm hooked. I'm like, I want this game, and then I played for like a day, and then I don't do anything else with it. But yeah,
you gotta play it just to beat it, and then once you beat it, whatever, you can move on. But sometimes
I'm their target audience.
Addicting.
Yes.
Yeah. Well, believe it or not, you know, the average mobile gamer. What do you think the average mobile gamer looks like? Age, gender. What you think? Like maybe 18?
No, dude. I guess would be like seniors, honestly.
Really? Because you're right.
Yeah.
You're close. It's 36-year-old women. Really? Isn't that surprising?
Yeah.
So I thought that was shocking. Now, you know Candy Crush. It's one of the most downloaded. It's one of the most downloaded games. What did Logan say? Oh, he's got to update his Chrome. Logan Brady's coming on too. But
yeah,
Candy Crush. It's one of the most downloaded games. Guess how many users?
I don't know, like a billion.
Billion. 1 out of every 8 people in this world play Candy Crush, which is such an absurd stat to think about. 1 out of every 8.
I'm kind of nailing these statistics, dude.
You are.
Come on.
You might be their core customer.
I am, dude. I know exactly I know the market a little too well.
So, would you be interested in being able to, let's say, invest in the next Candy Crush before it became Candy Crush?
Yeah.
Isn't that exciting?
Have you ever seen Entourage?
Yeah, Entourage.
Yeah, you've seen Entourage. And you know what you sound like? You sound like what's his name? One of the guys when like they're pitching the Ramones to him, and he goes, "Is that something you might be interested in?"
What's up, Mr. Brady? Wait, which one?
The really rich, like older guy. He was like Bob or something. But he's like, "What if I were to tell you my chef makes the best steak in the country? Is that something you might be interested in?"
Yeah, how can you say no to that, right? Yeah. Well, Mr. Brady,
hey, sorry guys.
Professional. You look like you're ready to make an investment.
Oh yeah.
So I'm
Hold
gonna
on. I'm sorry. I'm getting my.
I'm gonna throw the URL in the chat so that y'all can look at it. And then I'm gonna throw it on the YouTube live stream. Well, we have Rising, Tyler Rising on the YouTube live stream right now, and he says great retention on merger games. What's the MAU, which is monthly active users of Candy Crush? And I'm pretty sure that's $1 billion. Tyler Rising, thank you for
Sorry,
participating. And here's the WeFunder link. You know, I was talking to Tommy before this, and Logan, and I was telling him that Candy Crush. I already said this in the. Oh, hey Peter, it's good to see you too.
Hey guys.
Pete, you want to make an investment in the next Candy Crush?
Maybe.
Does that excite you? Does how about this? Would you get excited if I told you this company, Candy Crush, has 1 billion monthly active users, and this company has a lot of potential, and the current valuation is only $28 million? Does that excite you?
It excites me.
Yeah. So I'll go through this. I'll go through the company right now, but I put the link in there. Okay. Tommy,
I'm
can you
looking at it
click
right
on?
now.
You can look at it right now. Perfect.
Yeah, I'm
So-
looking at it right now. Sorry, I'm on my. I had to go on my phone. I tried to update my Chrome, but apparently my Mac is not updated, and so it doesn't support it, which is annoying.
That's a bummer.
But I'm on my phone, so I'm here. I have my laptop pulled up, so I can make sure I'm getting I'm interacting as well as possible.
Well, we appreciate you joining. So this company is called Carbon Counts, and full disclaimer, I interviewed the founder on Monday for the podcast, and the episode's going to be dropping pretty soon. And when you want to invest in startups, because there's not much like financials to really base your investment off of, you want to look at the founder, you want to look at the team, and you want to see if the idea in the market has some sort of traction where you can see potential. And when you're angel investing, you're not looking for maybe 2x your return, but you're thinking, well, can it realistically 10x or 100x? That's what you're kind of looking for, right? You're looking for the upside. So I should probably share my screen. That would probably be a good idea. So this founder, I found him very impressive. It's Carbon Counts. And what they're doing is they're creating a mobile game that plants trees in the real world. And you might think, well, how does planting, yeah, well, I mean, that's cool, but I think the first thought is, well, how does planting trees really help with a game achieving 1 billion monthly active users and scaling up to $1 billion in revenue a year, right? And they did some studies that I want to show that I think is quite interesting. The studies showed that with the planting trees, where is it? Right here. They tested no planting trees versus planting trees, and if you look, the retention rate was significantly more with the planting trees, to where users were willing to go, it looks like almost double the amount to start level 26 or get to level 26 and start level 26, knowing that they have milestones to where if they accomplish that level, beat that level, they would then get more trees planted in the world. And so I think this is quite an interesting incentive, incentivizing users to play a game that looks kind of similar, has a similar format to Candy Crush, but they also get to, the more they play it, the more good they get to deliver in the world, right? It's kind of hard to not want to play a game like that, knowing that you're getting rewarded for playing the game. So we look at that. Now let's take a look at the team. Well, I guess
Feda, can I ask you a question?
Yeah. Ask me a question.
So this I don't know if you covered it or not yet, but the WeFunder.com itself, I can't imagine me, Tommy, or Logan have ever made an investment through this platform. Could you maybe go into how that kind of aspect of this actual investment works?
Yeah, so that's a good point. So do you know what Reg CF is?
Reg CF.
I'm not familiar.
Okay, so basically with this podcast, what I'm doing is I'm showcasing Reg CF startups. Reg CF startups are startups that are raising capital via regulation crowdfunding, which allows non-accredited investors to invest. Investors like me, you, the everyday person. To be an accredited investor, usually you have to have what, $200,000 of annual income for the past 2 years. You have to CFP, right, Pete? Is it CFP?
I think it's you can have the 7 and 66, but it's 200,000 income and then $1 million in net worth.
Right. So with the regulation crowdfunding, they wanted to still provide this opportunity for non-accredited investors because oftentimes these angel investments, these investments investing alongside venture capitalists can yield some of the highest returns, but are also risky. So it is important to note that they are risky. So WeFunder is a platform that allows where they host startups that are raising Reg CF rounds. So this is kind of one of the two big platforms, this and Start Engine. And so I made an investment on WeFunder the other day. If you want to know how WeFunder's business model works, I think that's what you're kind of trying to get at to understand.
I think it's more like if
what the cut is.
Yeah, if you want to invest, like, is it obviously going to be held on this WeFunder platform? Like, it's obviously not going to be linked to a brokerage like Fidelity account or.
So what you do is you invest it as a safe note. If you know what that is, where you're investing in at this valuation, and then they go to a Series A, then your investment is on the terms of this valuation, not the Series A valuation, if that makes sense.
And so like Series A is like the venture capital, like funding the project. Series A, then it goes on to Series B.
Yeah.
Am I getting that right?
So yeah. So think about this as like a seed raise, right? So, or like a friends and family way to raise capital.
Seed funding. Yeah.
So if you invest at this stage compared to if you invest at, so let's say this is a $28 billion valuation. Let's just round it up to 30. All right, this is 30. If they raise a Series A at 60 million, your investment doubles on paper. On paper, it's important to note on paper because they still have to get the liquidity by merging or getting acquired. But because it went from you invested at 30 million to now 60 million, your equity doubled its value. So that's the overall premise. Does that make sense?
Yeah.
Yeah. So this is a game. I think it's interesting to talk about kind of I didn't realize the mobile game industry was as big as it is. I pulled up a chart and this says the mobile game market size is 200 billion in 2023, and they expect it to reach 500 billion in 2029. And I think that's on pace for a 15% compounded annual growth rate. They have it 775 billion by 2032. So this is definitely a growing market. Now, Pete is our financial expert here. So Pete, what do you think about a market growing at 15% compounded annually?
It's a pretty good market to be a part of.
Mm-hmm. Now, Pete, if I told you had the opportunity to invest in a market that was growing 15% compounded annually, would that excite you a little bit?
That would certainly excite me. So let me toss you this. My mind naturally goes to kind of what you alluded to before with one, liquidity and how that aspect's going to work out. But two, I don't know how much light you can shed on any tax implications with an investment like this through crowdfunding. Because
I don't know that I'm going to full disclaimer. I don't know the tax aspect. But I'm assuming you will be able to, because can't you deduct unrealized losses, or is it only realized?
Realized losses. And so I know that just through like stocks and bonds. Again, I don't have pretty much any experience through crowdfunding. That's why I'm going to defer to you, because I don't know if there's extra, I guess, tax rates through, was it Reg CF you're saying? I don't know. Well, I don't know. So I didn't know if you knew.
I think it's still taxed as a private,
just like a common security.
Right. So I think it's still going to be okay. If there is a gain, it's 15% capital gain, right? Mm-hmm. It's not like ordinary income tax. So I think if that's what you're asking, the purpose of them doing regulation crowdfunding was to give the opportunity for non-accredited investors like us to participate in some
Right.
of the most high returning asset or investments possible, but also they limited the cap on how much we can invest. So I think it's like 2,500 per 12 months. That'll probably be for us. So
that's
they
per
wanted
person.
to kind of, yeah, per person. So they want to minimize the risk of non-accredited investors because, quote unquote, not as sophisticated as the accredited investors. So that's why there's a cap.
So is there I don't know, sorry if I keep interrupting, but
No, it's good.
is
Questions
there
are good.
like with stuff like this, is there say, because I know like a lot of alternative investments for accredited investors are traditionally like hedge funds, or I don't know, like
Right.
I'm just stick with hedge funds. They have like manager fees a lot, or like a carried interest fee for the managers. In this particular case, I mean, it's not a hedge fund per se. Is there any extra, like, do the owners of this, do they get like an
So-
extra fee or something for our like
So it's
say
this-
your scenario, Series A funding happens and the valuation doubles, does a percentage of that increase in
Not
equity? Go ahead.
Are you talking about the platform, like WeFunder as a platform?
I guess I'm asking
And they-
about the platform. Yeah, I guess the platform is my question.
So the platform takes usually a 7% cut of whatever the startup raises, but that's not from the investor side, but it's from the startup side.
Okay.
So does that make sense? So the
Yeah.
startup more or less basically pays for the opportunity to then raise more capital on
Right.
the platform, since the platform has users, has a base where people can come to it.
Okay.
So that's usually the fee, and then there's also legal fees like getting your financial statements, having usually some form of audit, not like usually a financial. I think it's more of a financial reporting audit. But so with this startup, Carbon Counts, they've already raised $5.5 million in VC and angel investors. So I like that. If a VC or an angel investor are investing in the startup, usually that means they see the upside, they see the potential. And then going back to the three things when looking at the startups: the founder, the team, and then the idea. So the expert team, that's always a good thing, because ideas are worthless. It's the team that really matters. And so they have people from Club Penguin, Plants vs Zombies. I don't know if y'all remember that OG game. What a great game.
Oh yeah.
And then
Those raise money on this platform?
Not raised, but people working on those teams at the time now are working for the startup.
The startup
make sense?
WeFunder.
No, the startup Carbon Counts. WeFunder is the platform hosting them to raise capital.
Okay.
So the startup is Carbon Counts.
Right.
And so they're aiming by 2026, $100 million in revenue, $100 million trees planted. So yeah, I think it's also, this is a projection, not guaranteed. That is important to note. Obviously, that is very aggressive. $100 million of revenue, but 100 million trees planted is also really, really dope. I think that's cool, and I think the impact that can have is really cool. So
it's also interesting. Sorry, I'm on Carbon Count's website at the moment, and it says for every $100 invested, we plant 10 trees.
Yeah, isn't that cool?
Which is an interesting. So I would imagine that those $100 invested is through WeFunder directly.
Yeah. So if you look right here, there's the investment. Where is it? I think this is down here. Usually this is the investment incentives, right? So if you invest $100 on WeFunder, they plant 10 trees. 250.
Okay, I see.
25. So those are just incentives. Now, I think if we look at they have the team right here, which the interesting thing about this team is you look at the team, they all look relatively not old, but definitely experienced, which is good. It seems like they have a lot of experience. So Michael is the founder. He's a 3-time entrepreneur, 2-time co-founder, and has had 2 successful exits, which is very promising. That means he knows the roadmap. He's done it before, and he's had success. And so one of his successful exits was uPromise, which I believe that was a startup that was helping people start saving at an earlier point in their career for their children to go to college later on. So it's definitely a mission-driven startup. And
I think I've heard of that.
yeah, I want to say they got bought out, or they got acquired by a very big successful company. And then okay, Vikram, and I'm sorry if I mispronounce any of these names, but Vikram, he worked at Google for 15 years. Was the founder of 2 tech startups, so having a CTO with experience, that's very good. And then Brett, I don't know, Brett serves on boards. Looks like he's, yeah. Okay, well, the next one. Okay, Nicole worked for Disney, Pixar, Star Wars franchises, using the entertainment-driven impact. So figuring out that problem, she looks like she's going to figure out how to scale and how to basically scale with impact. So continuing on their mission of planting more trees, while also scaling. Kyle was a co-creator of Plants vs Zombies and Garden Warfare franchise, so a lot of experience. Kiri, yeah. So she mentored teams at EA, great gaming franchise, Disney, Lululemon, Lulu Bro. And yeah, so that's just some of the teams and some of the team's experience. Clearly experience. But Tommy and Logan, I want to know kind of what are you thinking right now when you see the startup? What excites you? What makes you nervous? What do you think could be a risk? What do you think could be an opportunity?
How long has the company been around for so far?
It's a great question. The company, I know they're testing right now in 5 countries, and they have the traction. I think they started. Let me find the answer. There should be the answer somewhere here. I want to say 22 or 23. So
Okay.
it's definitely very new, and they're hard launching. Yeah. They're hard launching this quarter. So they've tested right now. They're testing in 5 countries. None of the countries are the US. I think a lot of them are in England. They're testing that and getting data from that before they do the hard launch. But that's a good question.
Yeah, I'm looking at it. Says that the game hasn't been released yet, correct?
Correct.
Okay. So this is something they've just been working on.
Yes.
And how much do they plan on raising? How much funding do they plan on raising?
So they've raised $5 million. So this is actually great question, Tommy, because this is part of the reason why I'm a little excited. I was talking to Michael, and Michael said that they really don't need to raise that much money from CrowdCF. They're doing it because they want people to feel they want people to get in now, because once they raise their Series A, they can't really go back to raise capital via Reg CF, just because it doesn't make sense. Once you raise a Series A, you're raising at like a $50 million, $60 million valuation. At that point, you're kind of getting too big to raise via Reg CF. But with that being said, they plan on raising a Series A at the end of this quarter, kind of starting, or the beginning of next quarter. So that's where exciting. I forget what he said the valuation was, and I don't want to say it out loud because I'm not sure, and I'm definitely going to botch it. But it's definitely above this $30 million valuation cap. So obviously it's just a paper gain, but still a gain.
Have you looked into any of the VCs to see kind of the returns they get, or their overall success?
I know the average. So okay, so I think it's important with venture capital investing. Their business model for investing is based on the power law, which basically means if you do 100 investments, 5 out of them are going to deliver disproportional returns that are going to then carry most of the portfolio up. Meaning, like one's going to deliver, I don't know, let's say 100 or 1,000x. Then 2 are probably going to deliver 10x. 3 are going to deliver like 3x. Then 5 might break even. 10 lose money. So that's kind of the mindset is you don't want to miss out on winners. You're fine taking risks because of that, because you know that one startup's going to explode up You don't want to miss out on winners just because missing out on winners is way more costly than missing out on losers. Because you can only miss out the amount of money you invest. Like you can only lose that much money, but you can lose the amount of money you can miss out on missing a winner is like 100x, 1000x of what you would have invested. So, but back to your question, the average venture capitalist, I think I saw a stat that was like it's like 18%, 16% return. So yeah, when you factor all that in, yeah.
Is that like what's the time span for like that? Like for
that
60%,
was,
do you know?
So usually it takes 7 years for a venture capital fund to kind of get its returns back, but that stat was ranging from, I think, the venture capitalist average from 2012 to 2023. Is that what you're asking, Pete?
Yeah.
Does that help at all?
Yeah. Thank you.
Okay. Weird. So, yeah. Oh, do you want to know what Michael's background is?
Yeah.
Yeah.
You want to check his
He's the head guy.
Yeah, he's a founder, the co-founder and CEO. Let me pull it up.
And you talked to him the other day?
Yeah, I interviewed him. He's
That's cool.
and part of the reason why I really like him as a person, and he's also really smart. So anytime
invest in people, baby.
Yeah, anytime you Cambridge, Massachusetts. And he's also experienced too. He's done this before. He's had 2 successful exits. That always helps. So, Michael, he co-founder, let's see, his education, vice president at, I don't know what that company was. Saving Star. So I think You Promise was bought out by Saving Star. I think that's no, it wasn't. I don't know. But he went to London School of Economics, and then he went
best
to Harvard
economic school in
Business-
the world.
Yeah, and then he went to Harvard Business School in 94 through 96. So yeah, definitely smart. And yeah, so good pedigree. Now,
So, I would imagine myself, I've never invested into a company like this, especially not through like WeFunder, things like that. It's awesome that there's however much you invest is also you get that many trees planted. But what's the timeline, and how does an investor, like just a normal person like me or you, see the returns on this if and when the company becomes successful?
These are great about how to make money.
With the truth,
Logan,
of course.
yeah. Logan, I love that question because we want to make money, right? That's why we invest.
Exactly.
So let's see if let me pull up. So WeFunder allows you to track your portfolio. But to answer your question, we make money once there's some form of liquidity, which is going to usually be like mergers and acquisitions. All right. It's going to be that aspect. So this is a company I invested in, Bimodal, but it usually takes like 7 years, right?
Okay.
And then as they continue to grow, you can also sell your shares on secondary markets. I think that gets a lot more complicated. But we're banking on them to either get acquired or to go public, baby. We're going for the 1000x.
So is it? So yeah, that's best case scenario. Does that mean it's impossible before either of those events for us to get any kind of return on principal? Do you know? Like is liquidity totally locked up until one of those events?
Well, you can sell on secondaries.
Yeah, but say you don't want to do that because I just don't know how to do that, and it sounds
But if you
complicated.
don't want to do that, I don't know how else. Just because it's not like it's still a private company.
Like I guess so. The mindset should be your money's gonna be locked up for average 7 years because you're gonna bet on one of those two, either an IPO or
an
another company
acquisition.
buying it out. Yeah.
Yep.
Okay.
So that's kind of the mindset, right?
Right.
And that's why you want it to get public as fast as possible, because once it's public, then it allows a lot more liquidity. So you can either stay or you can get out whenever you want, just because it's the public market. I do think. I mean, I don't know.
Have
for
you-
Sure, but yeah.
Sorry. Have you
Yeah,
you
go.
explored that secondary market and how just I mean, I gotta imagine it's very over the counter, like you gotta find
Yeah.
someone that wants to buy it. Like it's not gonna be a regulated exchange, I don't think.
I think there's a lot of people that want to buy in the secondary. So I don't know. Do you know Carta? Have you heard of Carta? Carta does cap tables for startups, because cap tables can get really complicated if you're doing Excel sheets, especially if you're raising at different valuations and how you kind of manage the overall like equity and structure. But Carta, they got in trouble for this because they were managing people's cap tables and also trying to sell people company startup shares via secondary transactions connecting the buyer and seller. But there are sites like that. So I know SpaceX, there's been a ton of secondary buying and selling with SpaceX shares, and I think with Stripe. So I guess to answer your question, I think it's tough, but I think it's tough because we don't know the platforms that do it because they're not as common. It's not like just investing in the stock market. And I think once you find those platforms, I can look into those platforms and figure that out. Then it's like, oh, okay. The question is there enough demand for that secondary market to be pretty robust? Obviously, for SpaceX and Stripe, the demand's clearly there. So I think that's where it comes back to the overall company. If the company is a good company, I don't think it's going to be as tough to sell or to provide liquidity.
Okay.
Can we talk about the game itself a little bit? Like, I know you mentioned
Yeah.
that. So when they tested, it was just like they were testing the ability to plant trees against not planting it. Did they release? Is that? Are they testing it against their own game? Did they release like another game that
So,
you just couldn't plant trees on? Like there was no incentive, or
so I asked him kind of, what's your proof of concept that this works?
yeah,
Just because this seems like a good idea, but I feel like we would have heard another startup do it before, right? Or another game do it before. And so originally, and this idea kind of originated because in 2016 there was this. I'll pull it up. There was this startup called AntForest that did something very similar in China. And so what they did was they combined a game with environmental impact, launched in China, and that market at the time had 900 million users, mobile game users. And out of the 900 million, 600 million played the game Ant Forest, which is a freaking absurd statistic, dude.
yeah.
Literally 66% of the market played the game. They planted 300 million trees. So that was the proof of concept. Now to answer your question, have they tested out the game? Let's see.
Yeah, just what was their control in that statistic?
So I think the control was just the game itself.
Okay, so they just like advertised it, like they just didn't
So
offer the option of planting trees.
So I think it's just, yeah, you want to play this normal game, and here's a game, play it. And then they said, okay, here's a game. If you finish level 1, we will plant a tree for you. If you finish level 9, we will plant X amount of trees for you. And then this is kind of, you see how planting trees definitely helps with the retention. Which at the end of the day, I think it's also important to understand the mobile game business model. So Candy Crush, they make $1 billion a year in revenue. Now, I think 1/3 of that, 33%, comes from in-game purchases. So in-game purchases, that's like, buying extra coins, whatever, to skip, to play to the next level. But then 2/3 of that comes from paid ads, the advertisements, the videos that we hate watching in between levels because we're like, oh, dude, I just want to play the next level. And you got to wait 15 seconds before you exit out of it. And so that makes up 66%. And I think
so is that the similar model that they're going to do, is having paid advertisements between levels to help compensate for like in-game purchases?
Yep.
And is
Yeah,
the rest basically just like, hey, you can pay to not have ads?
So I
Or is that considered in-game purchases?
I think you pay to skip ads, or you can watch an ad to help plant a tree. So I think they use the incentives of watching ads to plant more trees. I think that's what they do. So if you think about it, so they're like, hey, do you want to watch this video, 30-second video, to help plant a tree?
So they
Like,
leave.
it's kind of tough to say no. So then you're like, okay, fine. But as a result,
Yeah.
that brand is then paying them X amount of dollars to have this 30-second ad going on all these users, and the users are willing to do it because they know they're going to plant more trees. So they figure out how to kind of align the incentives for the user to want to continue to watch the ad, because that's how they make the money. And in doing so, then they plant more trees, which is what the user wants, because the user wants to play a game that, helps the company, with the environment.
How much is I'm sorry, this is like a stupid question, but how much does it cost to plant a tree?
I don't know. That's a great question, and I should have asked him. I forgot, but I did ask what type of trees they plant.
What kind of trees do they plant?
So they plant. It depends on the region, which I guess makes sense,
Sure.
because some trees need more sunlight,
Trees.
more water, whatever.
All over the place.
but I think right now they're planting trees in Africa and in, I think, some parts of Asia. That's where they're focusing right now. And I think as they continue to grow, they might expand a little bit, but they think they want to make their focus pretty concentrated, which makes more sense because they have partnerships with those, I guess, non-for-profits in that area.
Okay,
So-
that was gonna be my next question. Like, so they don't have like anyone planting the trees within the company. They're just working with. Are they making
Non-for-profits.
donations to nonprofits, or how does that work then? And just considering that planting trees, or
I think that's the partnership. I think it's viewed as a partnership with the non-for-profits and with the communities. So the
Okay.
non-for-profits have partnerships with the communities that kind of need some sort of reforestation just because it's very bare, or whatever the situation is. And I think a lot of times too, the trees are fruit trees. So I think there's very much interest aligned within the community, making sure these trees grow and stay healthy and protect the trees and help water the trees, because in return then the trees reap fruit, food that they can then use or sell, or, whatever the case might be. So the incentives are very much aligned all the way through. I think one of the big risks is how do you continue to keep the incentives aligned for all the different parties as you continue to scale.
sure.
So it's free to download, and the main source of revenue for this app is going to be paid advertisements, which
it's like
naturally
tokens.
leads to viewership being the key stat for this app, and they're betting on the ads not being annoying by incentivizing with trees.
Yes.
It is
Also,
free to
too-
download though. They're not gonna try to like $1 to download. It is
Yeah.
free.
I'm pretty sure.
Okay.
I mean,
Okay.
don't quote me on that, but like I'm 99% sure.
I feel like that's probably the right business model too, because
Yeah.
I don't know the last time I've downloaded a paid app. And I don't-
Yeah.
in-app purchases I feel like are also more profitable regardless.
Mm-hmm. I think that's, yeah. Well, if you think about the business model of successful mobile games, it's to get as many people on the platform and then to run the paid ads or in-game purchases. It really it doesn't make sense for a company to have to require you to pay to download the game, because then you're significantly limiting the amount of monthly active users, which means you can't run ads on the game nearly as cost effective as possible, just because there's less users.
So did you ask, or did Michael explain any outline plan they have to increase viewership? Because I mean, correct me if I'm wrong, I feel like that's what's going to drive this entire operation.
So
People
I think
using the app or the game.
So let's see. They had the beta.
Like, I don't remember how or why Candy Crush blew up, but I have to imagine there was some strategy behind it.
It's because of suckers like me.
Yeah.
That's when I blew up.
Well, so I was telling Tommy in the beginning. We think of gamers Well, I guess the question is, Pete, how many people do you think play mobile games out of 8 billion people in the world?
I mean, shit. I don't know. A lot.
Maybe like a
It's
billion.
a billion.
I think so. I
you
think I would say I played a lot more mobile games when I was younger, so I think there's definitely like an age demographic too that plays into that question.
dude, Tommy must have been the core customer. Dude, Tommy knew all these stats like the back of his
Did
hand.
you?
That's
So,
right. I did.
Yeah. So
I
I,
didn't know.
I, I
I
thought
did research.
I thought it was I thought it was younger, because I don't really play games on my phone. But the average mobile gamer is a 36-year-old woman, which is quite astounding to think about.
Yeah.
And
Interesting.
I know that's true because on the subway I look at all the women playing Candy Crush, just sitting down playing Candy Crush on their way to work, and they don't take their eyes off the screen and they love the game. And I also see a lot of old people playing it too. So I think yeah,
Them and me.
I don't yeah. And I'm definitely, I mean, dude, I think if I was told, hey, I can play this game, it's fun, it's a good way to just take my mind off what's going on, and I can plant a tree. Like for me, that's like, okay, you know
So
what?
he
I can do
didn't.
that.
He didn't like elaborate to you their. I guess what I'm asking is their marketing strategy. It's just word of mouth.
No, I definitely think they have some sort of marketing. I didn't ask that, or if I did, I don't remember the marketing strategy.
Okay.
But I know they definitely have some sort of strategy because I mean he's had two successful exits. He understands how to get it to product at that point if you've had two successful exits. And they've also raised 5.5 million in VC funding. So they have money.
Right.
So meaning they're gonna figure out, and the people on the team are people that they helped create Plants vs Zombies, Club Penguin. So, and I think the artists on the team, the game designers, the people creating the figures worked at Disney. So these are all people that understand the animated world well and the mobile gaming world well.
Well, I mean,
So
even the animation style for like, I mean, just on Everforest, which is the name of the game that Carbon, what is it, Carbon Counts is doing.
Mhm.
Like, it looks awesome. It looks like it was made by someone at Disney, which I think is pretty ideal. And especially if there's someone who's at Plants vs Zombies, which I can only imagine is like, you know, second to probably what, Candy Crush in
yeah,
terms of like household
that's
recognition.
that's such a good game.
That's what they need. I know, it's the best. I
Actually,
mean,
never
Definitely,
played
they even
definitely
had
worth
they had
this.
an Xbox game and everything.
Yeah.
I see that.
So
I'm just curious. I'm curious because I feel like most of their marketing probably is around the planting trees, which is a huge draw. But the game also has to be fun. And
yes,
is there like any gameplay, like actual gameplay that has been released to the public yet?
let me hold up. Let me play this. We can watch this. And I to be honest, I don't know if so they're
invest in it in 7 years. See if it's gonna. That's just the way to have a mindset with it.
I guess so.
can y'all hear this? Can y'all
No.
No.
Damn.
Totally wet. Can be. I put it back in.
Yeah, okay, so this is what we know. We know they're hard launching in the US, globally. And when is it?
What is the market for these types of games
Cute.
anyway? Outside of 36-year-old women, like, is there a geographical region that's like more prone to downloading these types of games?
I honestly think if I had to guess, I don't know. I'm guessing, but if I
Easy
had to
guess
guess,
if
I
I
would
know.
imagine, I would imagine, I would imagine Europe. I don't know. I think Europe, just with this environmental incentive.
Sure.
I think, yeah, and I think that's why they're also like the early beta is in, where did I see it? I saw it's in, I think, the Philippines, Sweden, and somewhere else in Europe. So they're launching the early beta in like Asia and Europe right now. and I would imagine, because I remember when I was abroad there, they were much more environmentally motivated than the U.S. Like very much so.
Absolutely.
So yeah, I think that's kind of the demographic. But then I think with the Candy Crush aspect, anyone can play that type of gameplay,
Yeah.
especially old people.
Totally. Yeah.
So,
And I mean, even with the, I mean, I used to work for a company that worked in the sustainability space, and I know that, you know, that Europe's like rules and regulations around it are so much better or so much like more advanced than the United States by like 10 years. They said that basically on average. So I thought that was interesting, and I feel like that's largely like public perception. It's like
yeah,
what
and
the laws are based off of, you know. And then I mean, it's interesting. Like I feel like Asia is probably a really big market as well, considering what you said, the Ant. What was the other app that was pretty successful?
Ant Force.
Ant Forest. I mean, I feel like that those are probably going to be the key demographics, and then obviously, United States is huge, but I wonder if is it based in the United States?
Yeah, based in Cambridge, Massachusetts.
Okay.
Well, and then also, I do want to give Pete his red meat. Pete, here's the financial statements, if you want to look at that.
All right. Working on a Sunday, baby.
Hey, I look at financial statements for insurance.
Oh, it is a PBC, which is pretty cool. So a PBC is a public benefit corporation.
I look at 1,000 financial statements a day. So come on.
There you go.
Let me add it.
Come on. Tommy, get after it. There's the
I could underwrite this.
It looks like the balance sheet. Yeah, it looks like they got 2.8 million in cash.
Long-term liabilities, $7 million. That's pretty heavy. What is that? Would you have any idea what that's from? Yeah, just loans.
It might be safe. I don't know. I'm not going to say because I have no idea.
Yeah,
no idea.
That's the correct answer.
Yeah. It's like their income statement. Oh, they're also pre-revenue, by the way. So I do think
is there
interesting. Yeah.
Sorry, is there? I know you said like. Is there any timeline for these types of companies, especially in like the mobile gaming business, to see a positive income?
I would imagine by the end of this year, we would.
By the end of this year, really?
I'm sorry if Pete was still looking at that. Pete, I know you like statements, but I think they might have it here. I mean, it's all projections, right?
Yeah.
So I don't want to say an answer and be like, oh, it's going to be profitable by the end of this year. But
yeah.
I think by the end of this year, when they hard launch in the next, I don't know, month or so, 2 months, and we'll be able to tell kind of the traction and how the company's doing by the end of the year.
Yeah.
Well, because they should get revenue theoretically, like right when they launch.
Yeah.
I mean, I would imagine they probably have ads already set up or like some type of revenue, and it'll only grow as the game gets more popular. But like, what types of costs do they have?
I think it'd be hosting costs, probably like a designing cost, but it's tough since they don't have any revenue right now. We can't see what the cost of revenue would be. Another cost would be cost to acquire customers. So a lot of those mobile games, right? I mean, you get the ads on Instagram.
I would imagine it's going to follow a J curve, like a private equity fund. You have to spend. You're going to lose money, and you have to get over the hump to start making money.
Yeah.
So I think that takes 2-3 years traditionally before you start to see the J come to fruition.
Like once it starts coming up like that.
Yeah, because traditionally, like hedge funds and private equity investments, you're going to see they're going to lose money because everything you just said, the cost of getting viewership, the cost of getting the whole thing running, you have to spend a shit ton of money. And then the trick is once you get down, you're going to go down. That's fine. That's not a red flag. It's what goes from there if it starts to creep back up.
To come up.
So
the most important metrics for this is going to be lifetime value of the customer. Like how long does the customer stay on and play? How long do they play the game? For how many days, months, right? And then what's the cost to acquire a customer? So that's because, if the cost to acquire the customer, usually I know for the PE model, you want it to be like the ratio is like LTV over CAC, which is cost to acquire a customer. You want the ratio, if it's 2, meaning 2 over 1, like that's not bad. If it's 3, that's pretty good. If it's 5, that's fucking amazing. So trying to figure out that ratio, and hopefully, once they start to launch, we'll get more insight.
Is there, I know we looked at, their like statistic about, retaining customers through planting trees. Is there any general statistic on like environmentally conscious companies or like that are doing this that people are more likely to lean to? Like, people are more likely to choose option A over option B.
Over B.
Like 20% more people, 30% more people are more likely to do this because they have an option like this where it's like plant trees or
environmental. What should I look up? Because I think that's a great question. Just like the significance, how much that impacts the decision making.
Yeah, how much like just even in general? Because I know there's that. I'm on TikTok all the time. I think there's this guy that sells canned T-shirts, and then I think he started.
Oh yeah, no, I know what you're talking about. Yeah, he makes it in a little tin can.
Yeah, and he started giving seeds in it, so that everyone could plant their own tree with it or something. And his company's like kind of blowing up right now, I think. But obviously anything on TikTok is.
Well, I think that's also tough too because he's running a ton of paid ads. So it's tough for me to understand if he's actually blowing up because he's acquiring the customers or if he's just blowing up because he's spending so much money to get them to come check him out. Right?
Yeah, true.
Yeah, I don't. Well, the United States produces 25% of the world's wood output. Nice.
Good to know.
So yeah, but that's where it's at right now. I'm trying to think if there's anything else or some of the questions. The nice thing about this is that you can see people ask questions. Fuck, I'm not sharing my screen. Okay. People will ask questions. So if you have a question, you can just type in a question, submit it, and then they'll answer it. So this question is, how does company make money? Do you sell ads in the app or carbon credits? The main source of monetization revolves around in-app purchases, allowing players to enhance their gaming experience and progress. Furthermore, players can opt in advance within the game by engaging in ad watching. What kind of trees are you planting? I think, Tommy, did you ask that?
No, but you brought it up.
Yeah.
That's the
mangroves. Are they all the same? Indeed, someone's got it.
Here's a question for you, Feda. As someone who looks at a lot of startups and new companies, do you see any downsides with a company like this?
I mean, there are a lot of it's can they get enough monthly active users, right?
Yeah.
Is it really big enough? Is the environmental incentive enough to encourage people to do it? But I really enjoyed talking to him. He was extremely smart, and you could tell he knew what he was doing. He's thought about this a lot, and he's experienced, which is probably one of the biggest things. He understands what he has to do to get to where he needs to go, and he's done it before. There's a saying, all things are connected. Even if you do a different startup, you still kind of understand the process of getting over the next hurdle and then getting over the next hurdle and slowly climbing up the mountain. Because at the end of the day, everything's connected one way or another. And he has a lot of passion too, which is really nice seeing for the overall product. And I think because I was imagining too, I could see my grandma playing this game just because of the fact that she's planting trees. And if you can see at the end of the month you planted X amount of trees from playing a game, I think a lot more people would play a game. I can see a social networking aspect where people start sharing how many trees they planted on Instagram based off playing this game. I'm not saying like that's gonna happen, but I could see a world kind of similar to Spotify, and I could definitely see that maybe in more environmentally conscious place like Switzerland, where people are doing that within their community. So yeah, I think there's a lot of upside. I think also too, if they're about to raise a Series A, that's even more promising. So we're getting in at the same terms that they raised from the venture capitalists and the angel investors. And he's not doing it because he necessarily wants our money, but he's doing it because he wants to give us an opportunity to get in before they raise their Series A. Because once they raise their Series A, there's no way he can get everyday investors like us into this company, into this opportunity.
Sure. I love the idea, dude. If you told, dude, if I had a crap day and you told me I could sit down, I could pop like a show on and play this game for like 20 minutes and plant a tree, game over. I'd feel great about myself by the end of the night.
And I think that too, if I kind of like investing in this company because it's investing with a purpose too. It's not just investing just to make money, but like make money and plant trees. Like,
yeah,
it's pretty cool.
Yeah. I'm investing in saving the planet. That's what I'm doing.
What about you, Logan? Buy?
No, I like it.
Sell?
Buy? No, yeah, no, I like it. I think that the premise does a lot. I mean, not only with like acquiring customers, but also with retaining them, just because it makes them feel good. Because you can forget about something and then all of a sudden you're like, oh my god. You get the the Spotify Wrapped, but the what's it called, the Everforest Wrapped. You're like, hey, congratulations, you planted this many trees. I'm like, damn, I'm gonna get back on this game.
And I just want to point out, James said on YouTube that Start Engine, which is another platform, they do have a secondary market for selling these safes. So back to Pete's question about liquidity. It's always nice to know, right? Yeah.
Awesome. Well, could you you have my email,
Yeah.
I think. Could you just send me a link of bringing it to that page of WeFunder? Because I mean, yeah, if you want, this would be it's a cool opportunity to, if you want to have part of your portfolio in something. I mean, I'm not gonna lie, it's gonna be super speculative because it is crowdfunding, but that's the whole premise with this kind of investment, is it not? You want to get that 1000x return with these type of things. There's risk involved, but
right.
If you have
you're not doing.
So
this
if you could
because
email
want
me
an
that
8%
link.
return.
Yeah.
Pete, are you saying you're gonna invest?
We'll see. I might.
Yeah, I need to diversify my portfolio a little bit.
It's just a fun. I mean, it's a fun thing to have, being able to do crowdfunding, and just like everything you're alluding to, not everyone's an accredited investor, and that does suck. Like seeing all these millionaires have all these extra opportunities that the common person can't have. So I do somewhat share your passion for crowdfunding, and I mean,
stick it to the man.
Yeah, I mean, have you played the game yourself? I can't remember. Did you mention that?
Me? I haven't played the game yet. The game hasn't been released in United States yet.
Okay. So I mean, maybe once you play the game, if it's a good game, bro.
Well,
I mean,
the round's going to be closed by then. That's the thing.
Wait, so when does it close?
He said probably beginning of February.
So there's
not a whole lot of time.
That's a week.
Yeah, the concept is like Candy Crush, though.
Okay, yeah, no, I mean,
right?
Again, yeah,
that's what it looks like, yeah.
Yeah, no, I mean, I think this is a cool option for those that want to have that exposure to the super speculative market.
I think people with addictive personalities and like that get attached to these games, aka me, if they're going for people like me, if I heard about this, I'd download it in a second. Personally.
Hey, Pete, you see me, Tommy, Logan, you see how we're just fly? That's because we want our investment to multiply.
Do you not see the vest, bro? Do you not see the Patagonia? That puppy was
Also-
slapped on there.
Also, on that note of not being an accredited investor and not getting those opportunities, Monday, which is tomorrow, I have an interview coming out, which is on Art of Finance, and they're digitalizing private offices. They're going to start with accredited investors, but then they're going to expand to non-accredited investors. But it's basically giving you your own family office on an app, which I think is pretty exciting. Pete might see that as competition, but
I'm all for it, bro. The innovation. So, yeah, I'm excited for that.
So, yeah. Well, Pete, I'll send you the link. And minimum investment is, I think, $100. I'm probably
minimum
going to
100.
invest $200, but y'all get to invest whatever you want. Invest what you want, and then I think that's pretty cool. We'll figure out. I mean, you don't have to disclose it right now, but maybe if you want to, that could be cool because we can figure out how many trees we're going to plant from this live stream. And then if anyone in the audience from the live stream also wants to invest, then we can total up and be like, damn, we just planted like 50 trees. We got to feel good of ourselves. Yeah. But
cool. I like it.
Right.
Yeah. Definitely got to get a graphic up for your LinkedIn. Put it on there.
Yeah.
Like, hey,
we do.
We planted all these trees, baby.
Yeah. Yeah.
Put a grand into it. Screw it. Why not? I lost 600 at the casino. Might as well invest it.
Invest in trees, baby.
Yeah, that's a lot better.
Do y'all have any more questions about the company, about the market? And if not, well, let's see if you can. Can you hear that?
The crowdfunding. You pulled up one of you. Fada, how many of these have you done? You personally?
I've done one. This is going to be my second one. And
so that one you pulled up, that's the only one you've done. The bio.
Yeah, that bimodal. That was an EV. They make engines for smaller EVs. So they're targeting bikes, and then I think I can see them expanding into like forerunners, maybe mopeds. But I think it's I like investing in the niche industry. Yeah.
So how long have you been in that?
Well, I've been interviewing founders for like the past 8 months in this industry, but I'm going to start investing. I'm going to invest at least $1,000 this year in this industry within multiple startups.
But that first investment, the EV, the crowdfunding, how long have you been in that one? Like, when did you invest in that one?
It was like 2 weeks ago, last week.
Oh, okay. I didn't know if that was like 2 years ago, because I'm just curious if, okay.
Yeah, no,
I don't want the boys getting rich without me. That's part of my incentive too.
Yeah, exactly. We all get rich together, and then afterwards, after it goes public and we cash out on 1,000x, 10,000x, then we can put that money. We can spend the day on the yacht, drink some pina coladas, some strawberry daiquiris.
I'm planting more.
Surrounded by all the trees we planted.
Planting more trees. Great call, Tommy.
Yeah.
Well, boys, I appreciate you coming on. I appreciate you making the world better by planting more trees. Carbon counts. We appreciate you giving us this opportunity. And for all the viewers and listeners out there, thank you for tuning in, and we'll see you next time. So long, boys.
Thank you, Fada. Thank you for having us.
Fada.
Peace.
See you guys.